one signature. $60 billion vanished. It's 1921 and Secretary of Treasury Andrew Mellon holds a pen that will reshape America forever. The man staring back at him from across the mahogany desk controls more wealth than entire nations. But here's the twisted part. This billionaire will pay less in taxes than his own secretary. How is this possible? Because Mellon isn't just writing tax policy, he's writing his own paycheck. Welcome to the greatest magic trick in human history, making mountains of money disappear from government coffers while the public watches, unaware they're funding the show. For over 2,000 years, the ultra-wealthy have perfected an art form that would make Houdini weep with envy. They've turned tax avoidance into a science, complete with offshore labyrinths, shell companies, and loopholes so massive you could drive entire economies through them. But this story begins in ancient Rome, where a brilliant senator discovered something that would echo through millennia. The year is 168 BC. Marcus Licinius Crassus stands in his villa watching smoke rise from Rome's treasury, not from fire, from burning records. Crassus has discovered something revolutionary. The difference between what you owe and what you pay isn't a loophole, it's an art form. Crassus wasn't born wealthy, he was born clever. While other senators collected taxes, he collected tax collectors. Why steal from the treasury when you can own the people who fill it? Within a decade, Crassus controlled Rome's tax farming system, a privatized network that let him keep whatever he squeezed beyond his quota. The result? Crassus became so wealthy he could fund entire armies. Meanwhile, Rome's tax revenue mysteriously decreased. But here's where it gets strange. Crassus wasn't cheating. He was following the law perfectly because he'd helped write it. Fast forward 1,500 years. The scene shifts to fog-shrouded London docks where crates marked T are loaded onto ships. But these aren't ordinary merchants. They're East India Company directors, and they've perfected Crassus's strategy. Picture this. You're the British government needing revenue to fund wars. You turn to your wealthiest citizens, East India Company stockholders, for taxes. Their response? Certainly. We'll pay from our London profits. Here's the genius part. The East India Company doesn't have London profits. All their money is made in India, Bombay, and Bengal. Their London headquarters? Just an office that operates at perpetual loss despite controlling wealth of subcontinents. The government knew this was manipulation, but proving it? That would require auditing books scattered across 10,000 miles, written in dozen languages, maintained by clerks who died whenever investigators arrived. One director, Josiah Child, bought himself a noble title with tax savings, then used his aristocratic status to claim additional exemptions. The twist? Child's tax bill went down the richer he became. Child's accountants discovered that if the company's London office borrowed money from its Indian operations at high interest rates, those payments could be deducted as expenses. The East India Company was paying itself to reduce taxes. Parliament was furious. Child's response? He reminded them that the company employed 100,000 British sailors, dock workers, and merchants. Mess with the company's finances, and those jobs disappear. Child had transformed tax avoidance into economic hostage-taking. Jump to 1913. Congress has passed the 16th Amendment, creating America's first permanent income tax. The rate for the ultra-wealthy? A modest 7%. But John D. Rockefeller sees something lawmakers missed, a loophole that would define American wealth for the next century. Rockefeller's insight was simple. Why pay taxes on money when you can pay taxes on nothing? Standard Oil's profits belong to Rockefeller personally, making them taxable. But what if they belong to the John D. Rockefeller Foundation for Human Betterment, a charitable organization? Suddenly, Rockefeller's billions weren't income. They were donations. Tax-free donations to a charity that employed his son as president, his nephew as treasurer, and needed a 50-room mansion for headquarters. The government was outraged, but Rockefeller had checkmate. His lawyers argued that Congress couldn't tax charitable giving without destroying America's philanthropic tradition. Every church, hospital, and university would lose their exemptions. Rockefeller had weaponized generosity. The foundation's first initiative? Funding research into tax policy. Rockefeller was using tax-free money to figure out better ways to avoid taxes. But the government tried audits. Rockefeller's response was masterful. He hired the best tax lawyers. then had his foundation fund law schools to train better ones. He wasn't just avoiding taxes, he was building an industry to help others avoid them. Meanwhile, Henry Ford was watching and thinking, what if we made it simpler? Ford's innovation was the corporate shell game. Instead of one Ford Motor Company, Ford created dozens of smaller companies, each owning a piece of his empire. Ford Motors made engines, but bought them from Ford Engine Company. On paper, no company was profitable enough to trigger high tax rates. In reality, Ford controlled everything, and profits moved between companies like water finding the lowest level. Remember that opening scene? Secretary of Treasury Andrew Mellon, 1921, holding that world-changing pen? Here's what you weren't told. Mellon didn't just control America's tax policy. He was America's second richest man, owner of Mellon Bank, Alcoa Aluminum, and Gulf Oil. Imagine if Jeff Bezos became Treasury Secretary and immediately cut corporate tax rates by 75%. That's essentially what happened. Mellon's masterstroke was something called tax certificates, a seemingly boring technical change that created the most profitable loophole in American history. Under Mellon's new rules, wealthy Americans could buy government bonds, then use the interest payments to directly offset their tax obligations. In plain English, the government would loan you money, then let you use their interest payments to cancel your tax bill. But here's the beautiful part for people like Mellon. Who had enough cash to buy massive quantities of government bonds? The ultra-wealthy. Who benefited from the interest payments? The ultra-wealthy. Who had designed this system? Andrew Mellon, the ultra-wealthy Treasury Secretary who now paid virtually no taxes on his vast fortune. Mellon's personal tax rate dropped from 73% to less than 5%. His wealth doubled during his time in office. Meanwhile, the federal government's revenue from high earners collapsed, forcing harsh budget cuts to schools, infrastructure, and social services. But Mellon wasn't finished. He created depletion allowances, tax breaks for companies that extracted natural resources. The theory was simple. If you're pumping oil out of the ground, you deserve a tax break for depleting a finite resource. Here's the catch. Mellon owned Gulf Oil. The depletion allowance essentially meant Mellon was giving himself a tax break for being in the oil business he controlled as Treasury Secretary. When reporters asked about this obvious conflict of interest, he gave an answer that would echo through history. What's good for wealthy Americans is good for all Americans. But Mellon's most audacious move was yet to come. He convinced Congress that high tax rates actually reduced government revenue by discouraging investment. Cut taxes on the wealthy, and they'll invest more, creating jobs for everyone. Sound familiar? Mellon invented trickle-down economics 50 years before Reagan. The press called it the Mellon Plan. Wall Street called it genius. History would call it the blueprint for the 1929 stock market crash. October 24th, 1929, Black Thursday. The stock market is in free fall, wiping out fortunes in minutes. Desperate investors flood Mellon Bank's headquarters, demanding their money. But here's the sickening irony. Mellon himself is fine. While middle-class Americans lose their life savings, Mellon's wealth sits safely offshore in a web of trusts, foundations, and shell companies he'd perfected over 8 years as Treasury Secretary. The same tax avoidance structures that starved government programs had also made his fortune crash-proof. As breadlines form outside banks, Mellon regulated. He's purchasing distressed assets at pennies on the dollar, using the same tax certificates that had nearly bankrupted the federal government. The man who'd promised that wealthy tax cuts would benefit everyone had created a system where economic disaster was profitable, but only if you were wealthy enough to exploit it. The Great Depression changed everything and nothing. Congress passed new laws closing Mellon's loopholes, but by then, the ultra-wealthy had learned the fundamental lesson. Tax avoidance isn't about breaking rules, it's about writing them. Today's version looks different, but follows the same playbook. Instead of tax certificates, we have carried interest exemptions. Instead of charitable foundations, we have family offices in Delaware. Instead of Andrew Mellon, we have, well, that would be telling. The numbers are staggering. In 1950, America's largest corporations paid an average tax rate of 50%. Today, many pay nothing. Amazon, despite $280 billion in revenue, paid 0 federal taxes in 2018. Not because they broke the law, but because they followed it perfectly. The modern offshore system processes an estimated $32 trillion annually, more than the GDP of America and China combined. That's Crassus's tax farming, scaled to planetary proportions. But here's what the wealthy discovered that governments still haven't. Money doesn't disappear when you avoid taxes. It just moves into private foundations, offshore accounts, political influence. The great tax escape isn't just about keeping wealth, it's about converting wealth into power, then using that power to rewrite the rules that created your wealth in the first place. It's the perfect crime, because it's perfectly legal. So here we are. Mellon's signature created a blueprint still reshaping our world today. The great tax escape succeeded so completely we stopped calling it an escape. We call it optimization. History doesn't repeat, but it rhymes. And right now it's rhyming with revolution. What happens when ordinary people stop playing?